When a big event is on the horizon, an election, a rate decision, a war, we've all been taught what to expect. The market will either crash in fear or freeze in place, waiting for the smoke to clear. But that's not what happens, is it? Often, the biggest moves happen while the uncertainty is at its peak. Sometimes the market even climbs a wall of worry, and that's what really messes with our heads. You see chaos everywhere, but prices aren't collapsing. Or worse, they're going up. And you're left with that sinking feeling, am I missing something? Let's tear down an old idea you've heard 1,000 times. Markets hate uncertainty. It sounds right, but it's incomplete. Markets don't hate uncertainty, they hate surprises. And the difference between those two things is everything. Uncertainty is when the outcomes aren't known, but the possible outcomes can be mapped out. A surprise is when something happens that wasn't even on the map. You see, markets don't need certainty to work, they just need probabilities. Risk can be measured. There's a 70% chance rates stay the same, 30% they rise. A market can take that information and price it in. A surprise is what causes a true panic, when the price that was set based on one map suddenly collides with a completely different reality. So how do markets deal with all this messy, probabilistic information? They don't swallow it whole, they digest it, piece by piece. Think of it like watching fog lift off a field. You don't go from zero visibility to a crystal clear day in an instant. First, you see faint shapes, then outlines become clearer. Then you see the details. The market does the exact same thing. Prices adjust bit by bit as new information trickles in, shifting the odds. This is the key to understanding why a market can fall before bad news is even confirmed, or rise while the headlines still look terrifying. It's not reacting to today's news, it's reacting to how today's news changes the entire range of possible tomorrows. This explains one of the most misunderstood dynamics in all of finance, why volatility often peaks before the big event, not after. Volatility spikes when uncertainty is at its highest, when smart people are on opposite sides of a big bet. But the moment clarity arrives, even if the news is bad, volatility often plummets. Why? Because the guessing game is over. The market can collectively breathe again. Take an election. Markets churn and wobble for months beforehand, but once the result is known, even if it's controversial, they frequently stabilize or even rally. It's not because the politics got better, it's because an unknown finally became a known. This is where our own psychology betrays us. Our brains are hardwired to seek closure. Uncertainty feels dangerous, so we binge on news, reacting to every emotional story instead of thinking in probabilities. We see headlines screaming the system is breaking, and we run for cover. But the market is just quietly doing the math. It's adjusting the price people are willing to pay for future earnings. When uncertainty goes up, investors demand a higher potential return for taking that risk. So the valuation of a company drops. Even if nothing has actually gone wrong with the business, the risk has simply been repriced. The most common mistake is waiting for perfect clarity. But if you wait until the fog has completely lifted, you're usually buying after the market has already priced in the new world. So what's the move? Ask better questions. Don't ask, is this news bad? Ask, was this news already expected? And anchor yourself to your time horizon. The longer you plan to be invested, the less short-term chaos matters. And here's the final twist. That uncomfortable feeling of uncertainty, that's where long-term returns are born. When risk is repriced and assets get cheaper, future returns get better. The goal isn't to predict the chaos, it's to prepare for it. Uncertainty isn't a threat, it's a process. The market isn't choking, it's just digesting. Slowly, imperfectly, but always moving forward. The investors who get this are the ones who operate calmly inside the fog while everyone else is frantically searching for a way out.